Guy, as you know, it's been 14 years since we had a serious bear market in the United States, and I'll use the United States since it's the largest market. And that has never happened in American history. We've never had such a long period without serious economic and financial problems. So whatever is happening, we're getting towards the end. We see some of the signs. Inflation is rising again. Interest rates are rising again. We see new entries coming into new investors coming into the market, and they call up their friends and say, I've discovered this new thing called the stock market, and it's fun, and you can make money, and it's easy. It's easy to make money. And so all the signs that the world has seen many times before are happening again. I don't know how much longer this will go on, but I do see worrying signs for the markets and therefore the world economy. Well, it always has been able to. I mean, if nothing else, the Federal Reserve can just print more money and they'll buy them up. I mean, I'm not suggesting this is good, but that's the way, at the moment anyway, the system still works. And the U.S. can print and spend and borrow and spend. That will someday come to an end, or someday people will be on TV screaming about it, but not yet. But when you see it, Kai, when you see on the evening news that the man in the street is worried about all the government debt and the interest rates are going higher and higher, and the guys are saying, I don't care, I'm not going to borrow any, I'm not going to lend them any more money, then you'll know the crisis is here. There's gigantic amounts of off-balance sheet debt in the U.S., which will surpass, I mean, maybe Japan has a lot of off-balance sheet debt too. But to answer your question, yes, this worries me. I mean, the Bank of Japan, every day the guy goes to work and prints money. He prints more money and prints as fast as he can. He's a good Japanese bureaucrat. He does what he's supposed to. And this is going to lead to many, many problems, not just in Japan, not just in the U.S., everywhere. Kai, you're in Germany. Even the Germans have problems now. There are German cities that have big debt problems. Germany. My gosh, in my lifetime, that Germany was the paragon of virtue. Not anymore. Well, as I look around the world, Kai, I see that stocks in most countries either are or have been at an all-time high or near making new highs. Bonds have never been this high in the history of the world. So bonds are certainly a bubble. So what's left? Property, yes, you can invest in property, and in some places it's great, but many property markets, New Zealand, Korea, I mean, there are many property bubbles going on around the world. And really only leaves commodities that are cheap. I mean, silver is down 60% from its all-time high. Sugar, down more than 60%. So the only asset class that I see where they're really cheap entities are commodities. That doesn't mean you can't lose money if you buy them, but that's the only place I see on a historic basis cheap prices. I guess U.S. stock prices make me unhappy, to use your words, because there are bubbles developing. I mean, Apple goes up every day. You know, that's been a great company. That does not mean it's going to be a great stock forever. Well, since we're talking about the markets, the most worrying sign are all the new entries and the developing hysteria which is taking place. These are signs that happen at the top of markets. It's happened many times. If you haven't experienced it, you might have read about it. And that's what's worrying me probably the most, because markets can go up and down and do all sorts of strange things. But eventually, it's the investors who call the tune. And if we have a lot of speculative, uneducated or inexperienced, I guess is a better word, inexperienced investors, it worries me. Doesn't make sense to me. I've seen this movie before. Not the first time I've been to this rodeo. You know, there were back once upon a time, there was in the market, there were the nifty 50. And the wisdom was, you buy these 50 companies, you don't ever have to worry about the stocks. Just buy them and forget them. You know how that wound up. But this has happened often in history. in the 20s, Radio Corp of America. I mean, my radio was new and it was a gigantic stock. Stock went straight through the roof, always, every week, every day. I mean, 1929 came along and ended that story, but I mean, this has happened before, Guy. All these young, or I should say not young, but inexperienced investors coming in and talking about how easy it is. It's not the first rodeo. The market is not telling me, the market, I hope, will tell me when to buy it, because someday I'm going to see everybody's negative on silver and talk about how it always goes down and blah, blah, blah. If that happens, the market will tell me to buy. But silver is used in solar energy, as you well know, and in many other things. I'm not sure when I will buy or what the catalyst will be. I just hope I'm smart enough to buy it before it skyrockets again. Well, the most important information for any investor is don't listen to the TV, don't listen to the radio or the newspaper. Just invest only in what you yourself know a lot about. Now, and everybody watching this knows a lot about something, whether it's cars or fashion or something. And that's where you become a successful investor. Stay with what you know.
Key takeaways from Jim Rogers' interview. You know what's really interesting? We're living through something that's never happened before in American history. A 14-year stretch without any major market crashes in the US. But Jim Rogers sees some warning signs that make him nervous. Picture this. New investors are jumping into the market, calling their friends saying, "Hey, I just discovered this amazing thing called the stock market, and it's so easy to make money." If that doesn't ring alarm bells, I don't know what does. He points out that we've seen this movie before, like in the 1920s with Radio Corporation of America, or the nifty 50 stocks that everyone thought were unbeatable. Spoiler alert, it didn't end well either time. It's like watching your neighbor buy their dream house at the peak of the housing market. You know it might not be the best timing. What's particularly concerning is that pretty much everything seems expensive right now. Stocks? At or near all-time highs in most countries. Bonds? Never been this expensive in history. Real estate? Bubble territory in many places like New Zealand and Korea. The only thing that looks cheap to Jim is commodities. Things like silver, which is down 60% from its peak. But here's the kicker's most practical advice isn't about what to buy or sell. Instead, he emphasizes something surprisingly simple. Invest in what you actually know about. If you're a car enthusiast, focus on automotive-related investments. If you're into fashion, that's your zone. As he puts it, be boring. It might not sound exciting, but it's probably better than jumping on whatever hot tip is trending on TV. What really stands out is his concern about all the money printing happening worldwide. From the US Federal Reserve to the Bank of Japan, central banks are creating money at unprecedented rates. While this might keep the party going for now, Jim suggests this isn't sustainable in the long run. It's like putting more and more air into a balloon. At some point, something's got to give.